This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets, the SPY technical analysis, and doing a quick technical analysis over NVIDIA as we just had the earnings today. And with that said, let's go ahead and jump straight into the data. Now, we did not have much data for August 27th, but we did have the 5-year note auction. And I discussed this in last night's video, but we were expecting it to basically be right at this point, the low 3.7%. It's great that it pulled there. That's exactly what I was looking for out of the treasury market. So that's telling us the mid-year and I don't want to say mid-year, midterm, I guess, treasury, and this is still on the short side, but this is kind of edging towards that 7-year, 10-year period. This is pulling down quite significantly. So we have the 7-year note auction tomorrow on August 28th, and very likely as well. Currently, that's at 4.092%. That's very, very likely going to be probably about 3.85%, maybe a little higher, maybe closer to that 3.9%, but we should see that pulling down as well. Now, in the morning, again, for tomorrow, August 28th at 8:30 a.m., we have some really key data. We have the jobless claims, both the continued and the initial. We have been seeing those both picking up, and I've been talking about this quite specifically, but once this gets to that 2 million mark, it becomes a really kind of bearish, hawkish, bad indicator for the economy. It starts telling you that people are losing their jobs and the unemployment is increasing. The labor market is suffering at that point. And with that said, tomorrow we also have the core PCE data. I actually think on Friday we have primary PCE. Yeah, so we do have a little bit of PCE data tomorrow, but not the primary one we're looking for, but it's still important. It's the core personal consumption expenditure prices, so very important. They're expecting that to come down quite a bit. I don't really have any leaning on it which way or another. I'm really expecting those to pull upward, just because the data sets on the vendor side has been very high. They've had that what I call transitory price increase. We don't know if that's true or not, but so far everything with the data sets and everything is telling me that it is just a transitory price increase. So again, look for the 2 million mark within the continued jobless claims, and within the initial jobless claims, you know, basically just looking for that to continue going up. Not that I want that data set to go up. I don't think it's a good thing to see the jobless claims going up. That means people are out of work, and that's obviously not good. Now, what the market's really going to be paying attention to tomorrow, I think, over anything, unless we get some really bad jobless claim report, is the GDP. Okay, the GDP has been coming in very weak. We've been seeing the exports and imports coming in weaker. We've been seeing a lot of weakness. So the major kind of theory right now, or thesis right now, is that we are kind of entering into a slowdown period, and that the inflation is not real. It's not lasting. It's just transitory, and we're going to enter into a period of extreme slowdown of no to little growth and low yields. So that's kind of what I'm expecting. That's kind of what I'm seeing the data sets telling me, and that does go hand in hand with a recession, but I don't want to say that in like a scary way. It's just kind of part of the Fed cycle that recessions are kind of a necessary evil to help balance out bad credit and everything else in the economy. Now, with that said, essentially it's going to be 8:30 in the morning tomorrow. That's our key data. Now, we do have Fed Waller speaking later. That's end of the day, doesn't really matter. But that 7-year note auction will pull some weight from the market if it comes in cooler. So again, that's at 1 p.m. So 8:30 a.m. and 1 p.m. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into the SPY technical analysis, as always, let's go ahead and turn on our moving averages and our Bollinger Bands. And I'm going to do a pretty quick TA tonight. I have not been feeling good. I do want to try to keep this video under 15-20 minutes max. I'm going to try. But we're going to kind of blast through this tonight because tomorrow's a really important day for the data, and so is Friday. So these levels don't matter a whole ton right this second. With that said, let's just get through this. The market closed at 646.63, and because of that, the 5-MA will be pulling upward. So tomorrow, officially, we're kind of back in bullish posturing for the moving averages. Even though we are having a little bit of a sell-off in the after hours, but the 5-MA will be pulling up very close to that 644.50 range. So it will be above the 10-MA. Currently it is above the 10-MA technically, but it will have quite a bit of space above the 10-MA. With that said, we have not had a 5-MA test all week. Generally, we have a 5-MA test once a week, so that is kind of due for the market. And with that said, I am going to pull up the drawings here for a second. Now, again, just really quick, the 5-MA upper bounds tomorrow will be 646.50. The lower bounds will be 642. And for the upper Bollinger, it's at 651.90. So technically, we could still head up to that range very, very quickly, and I'm going to show you why. Now, pulling up the drawings, and we do have this larger consolidation channel that I do have highlighted in blue. I'm going to put it in white because that's generally how I have my consolidation channels. Now, generally, I would want to drag this up to here because this has been a pretty clean point of rejection. With that said, we do have a built cup here, and this is a bullish structure. Don't misunderstand that. This is a bullish structure right here. This is a built cup. Okay. Now, what's going to make this not bullish is a couple different things. One is that on bullish cups, we look for the breakout above. If this just pulls down and starts creating that double top type pattern, then potentially this is going to create a selling structure. Okay, so we're looking for that bearish structure at the top, highlighted in blue, and then we're looking for a bullish structure at the bottom. The reason why, we want the, cup and handle to form and get the breakout. That's how you get to the upper Bollinger, as you can see right here. That's how you claim that upper Bollinger range. So what you're looking for, if you're a bull, you're looking for the pullback. So you're looking for a bearish structure, pull back into the 5-MA. Okay, that's your nearest support. We haven't tested it all week. That's the next thing to kind of test here. So complete the top of the cup, pull back to the 5-MA, retest the 5-MA. If 5-MA test bounces, you're pretty much set for the upper Bollinger move. So that's the bullish thesis on the daily time frame, and I will go over the hourly in just a moment here, but I want to show the bearish thesis really quick. And the bearish thesis goes hand in hand with the bullish thesis because there is that cup build. We can't really ignore that. But what we're looking for is instead of this cup building a handle, we're looking for it to invalidate the bullish structure. So if that does occur, then this turns into a very large um, double top. And from the double top, we can create an inverse cup. Okay, and I know I didn't cover the top perfectly there, but pretend it is. And that will be marked in purple so that it is clearly visible. And I apologize for my colorblind viewers. Um, Bear structures are blue and purple for the most part. Now, with that said, bears, we are pretty much looking for the 5 mod to reject downward. Um, Either that or the next stop is pretty much waiting for that next upper Bollinger move, and then you short the day 2 again. But if that doesn't happen, if this handle breaks out towards the upside, um, we're heading towards another, major leg up, and that's just kind of the situation. So, be prepared. Very likely we will be getting that 5 mile test. Doesn't matter if you're bullish or bearish. Make sure you have calls, make sure you have puts, because this is definitely the range to be prepared. Okay, especially when we have the moving averages very, very close to each other. We have seen the 10 mile and the 5 mile pulling away from the 20 mile, but there's still range there. So if you're a bull and you're wanting that upper Bollinger, well, you can still hedge a put. And if we do get that move down, then, you're not getting burned the entire move. You don't just lose all of your calls. Same thing for the bears. If you're bearish on this like I am, and you're wanting to short, either one, we short the handle and that breaks down, invalidates that bullish structure like I mentioned, or we have to wait for that breakout for the upper Bollinger move, take the day 2 short from there, and then continue looking for bearish structure. Um, yeah, so that's the bull and bear thesis on the daily time frame. I just want to quickly go over the 4-hour chart, and you could follow along on the hourly. But I discussed this in last night's video, and I'm going to delete that inverse cup for a moment. But this bullish cup finally built. Okay, I know many are thinking that this is the cup and handle, but this is not the cup and handle, as this was not an original cup in here. It did not fully complete, so this was just additional structure. Now the cup's completed. Now we're looking for bearish structure up in the top of that cup, and from there, and that bearish structure could technically be this potentially larger inverse, or this larger head and shoulders there, but you're looking for the move down. From the move down, you're looking for bullish structure, so something like a cup and handle or an inverse head and shoulders. And again, that's going to give you that breakout. Now, for the bears, I did kind of highlight this, but we do have a little bit of bearish structure here. If this does break down, then we do have potentially the starting of a head and shoulders. It looks wonky, it looks jankety, but it's still a head and shoulders. That can also be the left shoulder as well, so potentially can build a right shoulder, head down from there. Or we look for something deeper, look for a deeper trough within that, and then build in the right shoulder and then again form that inverse cup. Okay. And from that inverse cup, we would then create a larger double top on the top. And for the daily time frame, that would create the top of that larger cup. One thing I do want to point out is that, again, in the bullish side, this can potentially be an inverse head and shoulders here. So the breakout is very potential here. Um, doesn't really matter if you're a bull or a bear, just be prepared. And let's get through the next few days. But I do want to cover in a video really quick. And the reason why I wanted to cover NVIDIA so much is because even though we had the sell-off during the earnings, uh, it's not bearish enough yet. Okay. Reason why is because potentially NVIDIA has built a bullish cup right there. And while this handle is pulling down very significantly, all they have to do is get the liquidity upward, break through this major consolidation channel, which those are those white lines, and then you now see NVIDIA in all-time highs again. The bearish thesis here is that on the daily time frame, we've been seeing NVIDIA within a bearish stance for a while. So even though the moving averages are consolidated right now, we still have the 5 mile underneath the 20 mile. We have the 10 mile underneath the 20 mile. So with this move down, even though the 5 mile will want to pull up tomorrow on open, with the overnight price being at currently 176, it will want to pull down. Now, that's only if that price stays at that price. Um, there could be, obviously a very bullish case here. Again, that could be a cup. We're pulling down right now to that, basically right in there. So we technically have bull structure at the bottom, bear structure at the top, and head up from there. Okay. So again, that's what you're looking for the bulls, but the bears have had this major selling channel starting to form. And I say major, but it's actually a micro selling channel, and I know most of my viewers don't understand my channel theories, but I will explain that another time. But this is a micro selling channel, and what that means is that generally you're going to see the price go from top of this channel to the bottom, and from the bottom of the channel to the top, and rinse and repeat until this channel is finally broken out of. Either it's going to be broken down on the downside to where this channel has to extend further downward, or it's going to break out on the upside to where it invalidates this channel, starts building some majorly bullish structure, breaks out of this consolidation channel, and then you will be in a new major buying channel at that point. So NVIDIA's earning was a double beat, but I don't believe it was quality enough that the overall market is accepting right now. Um, but we do need to be careful because we do have a lot of very potential bullish structures throughout tech, and we really didn't get a massive sell-off. NVIDIA dropped down to -4% at one point, but it climbed back up to -3%, and currently it's at -2.6%. So if this selling does not continue, then this can head upward very quickly. Just be aware of that. Um, it is very likely we will see the selling continue. I'd be very surprised not to see the selling continue, but we just have to be careful. This rally has pretty much been nonstop, and for all we know, potentially this earnings is enough fuel to continue the rally up a whole nother, month or two, until we see some worse economic data that can eventually pull down the equities. Now, I will just quickly say that as equities continue pushing upward and we are continuing to see our yields pulling downward, and you can look at many of the different yields, but we're going to go for the 10-year for a moment over a 1-year period. And since President Trump was elected, essentially won 125, it has been in a massive downtrend. Now, ever since the whole inflation narrative has cooked back up again, we saw the 10-year pull back up slightly, but ever since then, it's just been dropping and dropping and dropping. And it's actually getting ready to start dropping to points below, let's see, February and in the end of April. So if we continue seeing our 10-year pull down, pulling down basically to this 4.1%, then we will be back into February yields again, and that could happen within a few sessions based on just the price action we've seen the last few days. And why I'm bringing that up is as the yields drop, that makes treasuries more of a buy. Now, we haven't been seeing the action really reflecting through TLT just yet, but once the yields start pulling down and the overall treasury market changes from the major bearish market into slowing enter the bull market, um, it's going to cause a lot of buying and a lot of inflow into TLT because essentially TLT has been in a bear market for the last 2 years. It was in, I believe, a 30 or 40-year bull market prior to that, but it has been in a pretty brutal bear market right now due to the fact that the yields were pushed up very, very high, but we're finally at a point where we're seeing our treasuries correlate with the yields pulling downward, and we're seeing that happen very, very aggressively, even within the 2-year yield. Since President Trump was elected, that rate has gone from 4.38%, so basically 4.4%, all the way down to currently 3.6%. So not a full percentage point yet, but that is 0.8% or 0.80, percent. So very significant with the 2-year. That's telling you that the rate cut expectations are really starting to amp up. And if we continue seeing data continue showing weakness within the GDP, the labor market, consumer spending, consumer price increases, things like that, these yields will just continue going down. That will trigger the treasury market to buy bonds eventually, and that money will come from, you know, the S&P, NVIDIA, things like that. So just be aware of that. Other than that, let's have a good day tomorrow, everybody. Things are going to be kind of weird because even though we're seeing bearishness in the overnight and after hours due to the NVIDIA earnings, it's not super bearish. This can turn bullish very quickly. So just be aware of that. With that said, I hope everyone has a good day, trade safe, and I will talk to you in tomorrow's video. Take care.